Hello guys, and this video we will talk about the different credit scores and how lender are looking into it and what kind of programs they can propose you depends on your credit score.
Yes. So a lot of people don't know this, but the access that you have as a consumer is not going to be the same as a mortgage lender's credit report that we pull. For example, if you are looking at Credit Karma to get your credit score, Credit Karma offers you a Vantage 3.0 score. It's not even a FICO score. Some people look at like their credit card or their bank will offer a FICO score. When you're looking at that, it's usually going to be the highest version of the FICO that's currently available, which could be FICO 9, FICO 10, and that also never matches a mortgage credit score. So it's very, very old school with mortgage lending. So there are 26 different versions of credit scores. Yes. There is one place that you as a consumer have access to see what your true mortgage credit score is, but it does cost you money and it is not a hard inquiry. We can link that down below if you wanted to check it out. It's myfico.com. It typically costs I think $40 a month. You can cancel at any time. I cannot promote it. It is not my site, but it is public. It's accessible to you, and because you as the consumer are pulling your own credit report, it's not a hard inquiry, but it will give you all 26 versions of your credit score.
You just need to know where to check, which
Yes.
one to check.
Yep. So mortgage lenders use versions 5, 4, and 2 between the 3 respective bureaus, right? And when you pull that report, if you choose to do so, you will be able to see, it'll say mortgage, and you'll click on it and it'll tell you what your mortgage scores are and what version is being used to calculate it. Let's say you don't want to go there and you just want a lender to pull your credit report. Well, when we do that, you're going to have 3 scores typically, as long as you have enough history with all 3 bureaus. And on those 3 scores, we're not looking at adding them together and averaging them out. And a lot of people think that you average a credit score and that lenders take the average. That is not the case. It's the middle credit score. So for example, if you have a 700, a 600, and a 500, then your 500 is your low score, 600 is the middle score, 700 is the high score. And the reason for that is because the 600 falls in between the other 2. So that's how it's a process of elimination. We look, what is the highest one? Okay, we know that's not the one we're allowed to use. What is the lowest one? We don't have to use that. And then the one that falls in between those 2 is the one that represents your options for your file, your interest rates, your costs, your programs, all of those things. So it's very, very cool for people to learn that information, because I've had people tell me constantly, y'all average the credit score, so what is our average? It's not an average. It truly is whatever falls in between, and it can be one bureau or the next. Really just depends on the data reporting.
So in this case, you would use 600 score.
Yes.
Because it's in between of those 2. Okay. That's complicated.
So a lot of people don't know that though, so it's super important. And if you choose to click the link that we're going to place down below for you to check it out, you will be able to see what your 3 scores are with the mortgage lending. If you only have 2 scores, then it's going to be the lower of the 2. And if you only have 1, well, it'll be the 1. So we're allowed to do that. We also offer a 0 credit score loan.
Can you explain more about it?
Yeah, so a 0 credit score loan is an opportunity wherein we can use something called non-traditional credit, electricity bills, phone bills, any agreements that you have that don't report to the credit bureau, wherein you have a way to prove 12 months worth of your payment history with that account. And so even though you might not have a credit score itself, we have an option to be able to offer for that, and we use the other non-traditional credit to prove your credit history. And as long as we have 12 months on 2 to 3 accounts, typically they're looking at that. Your rent can be used, electric can be used, water can be used, phone bill can be used, as long as it's in your name. You just have to be able to show your obligation and 12 months history of you making that payment on time.
Wow, that's so it's a separate program?
It is, yep. So it works with both conventional and FHA.
That's cool. Yeah, I like it.
So there's a vast amount of opportunity. It really starts with speaking with a lender and a real estate agent. If you don't have a lender, then your real estate agent would be able to connect you with someone who has all of the helpful information to help you plan and prepare for what your options are.
Yeah, and then the most important thing is to be honest with your lender to
Oh.
explain all the situation so they can help you the best and find the best
Absolutely.
program.
Oh, yes. We're not the enemy. We're here to help you.
Thank you, April.
You're welcome.
Thank you, guys. Follow us and you will learn more useful information about the lending.